Welcome back, everybody. Now, South African economists have projected a positive and steady economic growth of 1.5% for this year, driven by recovering domestic demand, supported by renewed post-election confidence and improved energy security. With factors such as fuel price increase, high unemployment and global geopolitical issues or matters casting a negative slow forecast to the year. To give us an overview of how the economy might perform this year, we joined virtually by Dr Azar Jammine, the Director and Chief Economist of Econometrix. Dr Jammine, a very good morning to you. Thanks for joining us and the compliments of the new year.
And the same to you and to all the viewers. May it be a very good year.
Well, I certainly hope it'll be a good year, even though we started on a very grim note with the fuel price increase that came into effect yesterday. And this particular increase has been attributed to the weaker rand against the US dollar. Should we anticipate more negative adjustments?
I think we could have some more negative adjustments, but I think we need to put this latest petrol price increase into perspective. In the previous few months, the fuel prices declined from around 25 to 21 Rand a litre. So a 12 cent per litre increase that we've had in January is really quite negligible compared with the benefit that we've already had over the last 6 months. And then, but I think one needs to warn people that, yes, the fall in the Rand during the course of December on average of around 1% was quite minor compared with the depreciation that we have since had in the last week or two, which means that there is a chance that February might see a much bigger increase in fuel prices.
Yeah.
But again, take into account that we did have fuel prices at over 25 Rand a litre a few months ago, and we're nowhere near to that currently either.
And Dr. Jammine, just looking at South Africa's economy or how it has performed last year, what are your predictions for this year? And what are some of the contributing factors that will determine South Africa's economic growth?
South Africa's economy last year began on a fairly somber note. If you recall, we had intensive load shedding at the beginning of the year.
Yes.
And suddenly at the end of March, that load shedding disappeared. And that imbued quite a bit of an increase in confidence. Then we had the general election, ahead of which there was quite a lot of uncertainty. And then when the government of national unity was formed in June, suddenly people were very encouraged, especially certainly economic analysts and investors were encouraged by the fact that the populist elements in our political spectrum did not gain ascendancy. And there was confidence, therefore, that we would have continued fairly responsible economic management of the country. And then on top of that, we had fuel prices coming down sharply, and that it culminated with 0.25% cuts in interest rates, all of which gave a sense of significant encouragement. However, what was disappointing was that we were not able to correct all of our structural impediments. And the one very important one that still stood out later in the year was our inability to fix our ports and make them more efficient and get our railway system working again. And as a consequence, partly as a result of this, you didn't see the level of investment that one had hoped for. The hope now for 2025 is that maybe we were too optimistic in believing that we would suddenly see a massive spurt of investment straight away, and that investment takes time to decide upon, and that we will only begin to see that happening in 2025. And if that does happen, it's possible that we could have an upside surprise to economic growth this year. The balance of risks is undoubtedly no longer just on the downside. There is a significant upside risk to our economic growth. There was an additional boost given by the introduction of the two-pot retirement scheme in the beginning of September that allowed for pensioners to people with retirement funds to access a portion of that to go and spend or to repay their debt. And by all accounts, on the spending side, October and November, is certainly, if you look at retail sales and new car sales, suddenly shot up by more than expected. So we may be seeing some of that confidence now starting to emerge in terms of spending patterns. By all accounts, also Black Friday was quite strong. So, we are holding our thumbs now that 2025 will indeed see a surge of investment. If it does, we could get economic growth above 1.5%. But economists are cautious, and they are saying we don't want to bank on that. We'd rather just stick with 1.5%, which in any case will be slightly better than the 0.5% or so growth that we will have recorded in 2024. But it clearly is insufficient to fully address the massive unemployment problem that we have.
And I suppose we could read that through the lens of the global economic uncertainty. And perhaps one of the most anticipated events in the global geopolitics is the United States President-elect Donald Trump being sworn to office this month. How could his presidency perhaps benefit South Africa's economy?
Well, I'm glad you put it on the positive angle, because most people are fearful of the Trump presidency in terms of its impact on South Africa, especially with regard to trade relations and the potential imposition of import tariffs on South African exports to the United States. If that comes about, obviously the impact would be negative. But there are certainly, if you look at Wall Street, the last month was extremely buoyant. And the business sector in America is very upbeat about a Trump presidency, and they believe it will bring about higher economic growth. And if that is the case, if that positive view transpires, then of course South Africa's export performance could benefit. But it's too early to see exactly, and there is a wide disparity of views on what the Trump presidency could mean for not only the United States, but for the world economy as a whole. And we just have to wait with bated breath. There is a view that says that in the midst of all this geopolitical turmoil, the one thing that's very attractive about South Africa is that we're fairly isolated geographically from any geopolitical unrest. And that's actually a very big attraction.
And without focusing a lot on the United States, it begs the question, just how vulnerable is South Africa to global external shocks? I mean, in the light of inflationary pressures and interest rate hikes with the major economies?
South Africa is vulnerable to those global shocks. We've already seen it in the last month or so. And part of the reason why the rand has fallen back from just over 17 rand to the dollar to close on 19 rand to the dollar is because of the fear that the United States Federal Reserve Board will now keep interest rates higher than was previously anticipated, because of fears that a Trump presidency will bring about increased inflation. Now, if American interest rates remain higher compared with interest rates elsewhere, that makes the dollar more attractive. So the one saving grace in South Africa is we have a freely floating exchange rate. So if push really comes to shove, the rand could depreciate further, and that will enhance our export performance and protect us against protectionist tendencies from the United States. So it's quite a mixed bag in many ways, and certainly it's an environment of great uncertainty. But there are the positives that I've referred to. Hopefully, the Government of National Unity will remain intact and introduce further reforms that will enhance the economic situation domestically.
Right. And with the signs of an economic recovery, Dr. Jammine, are you hoping that the Reserve Bank will continue to lower the interest rates?
With inflation having fallen to below 3%, which is the lower end of the inflation target, there is a scope still for the Reserve Bank to cut interest rates a little further. I think one has to be cautious about being overly optimistic in that regard. The most one is looking for is another 0.5% cut in interest rates going forward, but that's, to be welcomed. And on top of that, consumers are receiving the benefit of lower price increases than had been the case before, especially food price increases. And we still don't have any resumption of load shedding. So there is scope to be relatively optimistic, I think, going forward.
All right, Dr. Jammine, lovely chatting to you. Thank you so much for your valuable insights. We do appreciate your time. That was Dr. Azar Jammine, the Director and Chief Economist of Econometrix, giving us his predictions of this year's economic outlook in South Africa.